So next learn about something as an evidence called as external confirmations. So external confirmation we can use for receivables as well as for payables, or to confirm any kind of third party related assets or liabilities. We use external confirmation. Banks, cash at bank, so that we use it as a bank confirmation. Now why this external confirmation is a very strong and one of the most reliable evidence? Because it is a direct evidence that is obtained by the auditor. So it's a direct evidence obtained by the auditor from independent third parties. So hence this is considered to be highly reliable evidence. But however, there has to be certain proper process the auditor should perform to obtain these confirmation requests, and restrictions imposed by the management may impair the reliability. So there could be certain restrictions the management might do. For example, management might not give us the receivables information, like they don't give us the communication details of receivables. So then we won't be able to reach out to them. So the confirmation are categorized of two types, positive and negative. Positive is always preferred. The difference between positive and negative is that, so let us say for example, you have in our company $100 of receivable balance. We reached out to the receivable and we said that please respond if you agree to the balance, okay, or you disagree to the balance, please respond. So the receivable will respond if he agrees as well as he disagrees to the balance. That is called as positive. We will get a response, right? When it comes to positive, we will get a response even if the balances matches to his records, or the balances do not match to his record, we will get a response. If we are getting a response, it is called as a positive confirmation. Whereas a negative confirmation is where he will respond only if the balances don't match. Only if he disagrees to the balances, he will respond. So for the same $100, if we reach out to the receivable and if the balances match to his records, he will not respond. But if as per his accounts or as per his records, if the balances is let's say $90 or $120 or let's say it's $80, then he might respond if the balances don't match. So we can expect a confirmation only when the balances don't match in a negative confirmation. So there is a problem with negative confirmation. What is the problem with negative confirmation? Let us say for example, we sent a confirmation request, a negative confirmation request to a receivable party. Okay, so to the customer of the company, we sent a confirmation request. But somehow it did not reach him, or somehow he forgot to respond. So what we will think of, the auditor will think, oh, you know what, he has not responded back to us, so the balances is matching as per his records. But in reality, he has either not received the data, or he has not received the confirmation request, or another aspect is that he forgot to respond. So those could be the reasons why he did not respond. But we might think that the balances match. So that is a problem with negative confirmation, and hence they are not preferred much. Mostly positive confirmations are more preferred. So there is a process that is involved to take a confirmation, and I'm just giving an example of receivables, but this can be used in other balances as well, maybe in payable as well. First, you need to obtain the listing. So let's say in trial balance, we have a amount which is mentioned. We need to get a listing by customer name. What are the balances forming up to? So let us say we have a balance of trade receivable of $1,000. How many customers these balances are adding up to? There could be 5 customers with 200 each. There could be 10 customers with multiple amounts each, etc. So we need to obtain the listing first. That is called as listing of trade receivable or listing of the data. By third party information, we need to know what are the balances forming up to. Once we get the listing, we need to agree to the trial balance. This is called as completeness test. So we obtain the listing which is outside the records. We are agreeing back to the trial balance, which are the ledger, which is the records. So taking the balance from the outside the records, matching it to the ledger is called as completeness test. This is a completeness test. Then what we will do, we will compare to the prior year. whatever the balance of the prior year, we'll compare to the prior year and then confirm. And then from the list, we take a sample. We obtain a sample. Alright, we obtain a sample. And we ask we might also take an aged receivables report. Like by, aging, how many days each receivable customers have not paid the balances by number of days. So there could be 30 days to 60 days to 90 days, etc. So we take, by aging the number of days for each of the customers. And for those, by aging, we will select samples based on the aging and we request for a confirmation letter. We will send them confirmation request and ask them to respond whether they agree or disagree. If they do not respond, then we will do an additional request, like we will try to follow up. We will call them or email them again, ask them to respond. If they are still not responding, we are not getting any information from them, then we will do something called as alternative testing. As I told you in last video, that if let's say if a client has a receivable balance as of 31st December, as an alternative, what we might do, we might check whether post year end we have received the money from them or not. If we have received the money from them, then definitely the customers agree that the balance as per 31st December is correct. So post year end settlements we might check, or we will check against the invoices and check against the invoices. That is called as alternative testing. So this is the normal process which is involved when it comes to confirming. So now what if there are certain exemptions or there are some non-responses when it comes to external confirmation? So if there is external confirmation disagrees with the balances, okay, then that is called as an exceptions. Like we reached out to the receivable and the receivable disagreed with the balance. Now the exceptions are considered to be misstatement and should be investigated. Like why the exception could be coming. It could be because, like for receivables, it could be maybe because of certain goods in transit. Like we sent the goods, so we posted a receivable, but they have not reached it. Or they have paid us the cash, which is called as cash in transit. They paid us the cash before the year end, but it did not reach us, so we did not remove the balance. Then it's fine. So not all exemptions are misstatements. That will be the goods in transit and cash in transit. Otherwise, there could be a fraud. Like they might, to increase the assets, they might post receivable balances, they might inflate the receivable balances, or the internal control is very weak. They don't care whether they receive cash or not. They don't check the receivable confirmations, all those things. They just post whatever amount they can. So that's a bad control. But what if the person does not respond? Then we might perform alternative procedures. Like we can verify supporting documentations like invoices, goods dispatch note and customer order forms. So when we say good dispatch note, we will be able to verify whether the goods were actually sent to them. Review the cash received after year end. So the customer will agree to the balance only, automatically agrees to the balance if he has paid for the money, right? He has sent the money, then he agrees to the balance. Discuss with the responsible company official, like what is the next step. We can tell them like we need the confirmation. So you need to talk to your customer and ask them to send us this confirmation. We can request that. So this is called as an external confirmation, and this is how the confirmations process actually works.